Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to continue our coverage of the red on the charts. And of course, you can see that it's pretty evenly distributed. We do have a couple coins just kind of pumping, perhaps off of a reaction to the drop that we had yesterday. But, it wasn't really that serious of a drop. But it did follow a fake out, and so the market is feeling a little bit shook up. And as you can see, stocks actually are quite in the red today, and I'm not sure what that's about entirely. We'll have to delve into that. However, there may just be a general sense of unease and perhaps profit taking before the Federal Reserve meeting tomorrow, right, which is Wednesday, September 21st. 2:30 p.m. Eastern Standard Time. Of course, Jerome Powell will give the news regarding what the Federal Reserve has decided. And guys, they might be actually meeting today, or they might be having discussions that are getting leaked. So just to be careful in this market, we also had a quadruple witching last Friday. And so this whole week from Friday all the way through probably the end of the week, to be honest, as the market absorbs whatever decision Jerome Powell makes, might be filled with a lot of shenanigans, a lot of just emotion based trading, and also new calculations in case he does increase interest rates by over 75 basis points. We're going to have to deal with the fact that only 80% of the market right now is counting on 75 basis points, and pardon me, only 18% is accounting on 100 basis points, which means that 80% of the market could get just an incredible shock and awe if the Fed should decide to increase by 100 basis points. Now, some have suggested that perhaps the market is going to take it as good news that the Federal Reserve is fighting interest rates. And I say, I kind of have to scoff at that because, that was for the summer. Okay? Like, back in the summer, back in spring, if the Fed was fighting interest rates, yes, the market would have been happy. You know why we dipped, most intensely? Is because the market thought the Fed wasn't fighting interest rates hard enough, right? But now it's too late. Now we are having recession indications, and recession indications means that the market does not want increases in interest rates, right? They do not want the Fed to go hard. And so if the Fed goes 100 basis points, it's just not going to be good for the markets. And so basically, if we get 50 basis points, we'll probably pump on the charts. If we get, 75 basis points, well, that's pretty much what the market is pricing in. And so probably we just go sideways, kind of chop around. Who knows? Might have a drop, might have a pump, but most likely a little bit of a pump would come out of 75, and a much bigger pump at 75. Pardon me, at 50 basis points. And then if it's 100 basis points, there might be some chop, and then just a probably another leg down eventually. Now that may correspond with the fact that some companies are going to be starting to report their Q3 earnings coming up. And as you can see, Oracle, Adobe, right? They've already reported, and we have seen drops in their charts. We can see, AutoZone has reported. So there are going to be a bunch of companies that are going to start reporting. You can see these pink boxes, and we will start to get in, some more data about whether or not stocks need to be devalued, whether or not they need to be priced to the downside as earnings start to get stressed in a recession. Now, guys, I told you that this is going to kickstart in quarter three, But quarter 4 is really where it's going to heat up, and then quarter 1 of 2023 is where we're really going to start seeing the damage as interest rates and the Federal Reserve policy comes head to head with the economy and the recession and those earning reports as we start seeing Q4 earning reports, and then probably by the end of spring, there should be some trailing data with the earnings reports from the winter quarters, and we should see. Exactly what type of damage has been done to the market, and so the market can reassess if it needs to just downgrade the entire market a level lower, right? And that could be what takes us on our final leg down, even though up until now it's primarily been about interest rates and about inflation. The next legs down, if there is going to be any type of relief rally and then a quarterly backfill to the downside, or if there's just going to be just more downside or suppression in the markets, it's probably going to be due to earnings reports starting essentially now, right? So for the next 6 months, the next 9 months, the question is going to be just how bad are earnings? If earnings are too bad, then all of the stock markets will drop, and that should suppress crypto and also take crypto down with it. And so I am projecting a bottom to this market anytime between perhaps November to the end of spring, and perhaps summer at the latest 2023. And when I say the bottom of the market, I mean something like this, right? You see how we have a bottom and then we have another bottom. So let's say that we put in a bottom in like October, November, and then maybe we start rising or we pump or something, and then we might just come back to those numbers spring 2023 or perhaps summer 2023, something like that. And then we'll have confirmed the bottom with those two lows, okay? And, hopefully the second one is a higher low, right? And we're not just, left questioning what we're doing. But right now you can see that on Bitcoin we do have kind of a double bottom, just all zoomed out. You can really see that, the market might want to rally off of this, assuming that we do get 50 basis points or 75 basis points. They might want a rally. 100 basis points would be hard to justify a rally. We do have this downtrend, and so most likely, 100 basis points would come in conflict with our downtrend, and it would probably just smack us lower, probably into October, November. And then November, we would be expecting more interest rate increases by the Fed. Okay, so the end of the year is going to be perilous. The first quarter of 2023 is going to be it could be perilous depending upon what the recession is like. And then probably a conclusion to all of this in terms of information is going to come between spring and summer 2023 in terms of confirmations. Okay, so guys, that's my theory of the market. Let's go ahead and take a look at the Bitcoin chart. Let's go ahead and jump down to the 4 hour here. Now, I have actually updated these momentum zones just because we are coming into a pretty critical moment with the Federal Reserve. You can see that Bitcoin does look very bearish. On the 4 hour, it's postured down under its EMAs, right? On the daily, it's postured down under all of its critical EMAs, right? And on the weekly, it's way under its, EMAs. Now, for the weekly, that's actually perhaps something that could be in our favor because usually we tag back to the 9. And so if we look at this kind of downtrend, perhaps we could pump up to the downtrend. Let me zoom out to the daily so we can get a little bit of a better perspective on that. Basically, what that would mean is this hard line right here that I set a couple days ago for us. This is looking more interesting as a possible pop-up before, if we do continue to the downside, perhaps we could pop up and hit our head. And this would be some type of a natural zone to get deflected at, 21,500. And it's also the number that we have to beat to break down out of our downtrend. And so Let me turn the EMAs off there. And so if we do want to break out of this just macro downtrend, right, we do have to break that 21,500. But as I showed you by the weekly EMAs, we could get a pop up to there, and then it would be basically a bearish retest of the 9 weekly. However, for the daily, like if we're just looking at the daily itself, if we want to recover any type of momentum, we have to get over this 19,700, 19,750, and then we can talk about being bullish on the daily. Just on a more basic level, again, popping down to the 4 hour, you can see that my little white line in the sand there is holding, and that does correspond to the updated momentum zones. So guys, like we have to break above. Last night I was saying that we had, let's go down to the hour, that we had little bear flags, right, that were kind of like popping us up. Popping us up, and then if we could put in another one, potentially we could have popped up here. But I was suggesting, guys, that don't FOMO into this. Don't FOMO into this bull flag, because we really have to get above and hold above this white dotted line that I was showing you. And look, we failed to do it. We broke down and then we back tested it. So that white line in the sand basically was really the critical number. And again, that would have done a breakout of this trend. We did not break out of it, and you can see that we're still pretty much just stuck in this. We're basically just stuck in this downward channel, which could have continuation to the downside, to be honest. There is no requirement that it pops up or anything. If we look at the 4 hour, we do see no that bullish divergence actually played out to the top of the channel, and so the MACD divergence isn't there. Let's see. Not really much going on the RSI. Let's look at the daily. That wick is a bit tricky, but we are reclaiming it to the downside. So it looks like that we are playing out this bearish, drive of, let's see here. Let's get the weekly. On the weekly, we still do have a drive of bullish MACD momentum kind of building up here. So this is something, actually. This is something interesting to watch out for. This could imply a bounce um, coming into the Fed meeting. So let's just watch this space on the weekly. Let's look at the RSI. Of course, the RSI on the 2 week is still in this formation. I did suggest that we could be at a low. You do see the EMA starting to curve, kind of like how it did up here. This wedge actually is directed quite lower. Now, this is a really, big secret, guys. This is like an open secret. So many of you guys probably aren't familiar with this type of shape. A lot of people aren't showing it. However, on the 2 week, okay, for the RSI, we do just have perfect, just textbook perfect falling wedges that do have a 70% chance of breaking to the upside. And while you can see that in the past, we've fallen and then we've popped up, kind of like faking out to the downside, we could get a fake out to the downside, pop up, do one last check back, and then just go in the market. And the RSI could be showing us the way, guys. The 2 week RSI. Now, people might be looking at the 1 week RSI, and they may be a little bit more confused as to what's going on. It's a bit more choppy. It's a bit more in and out of the lines. Even if I adjusted them for the weekly, I'm not going to mess with them because I want them to be fixed for my 2 week. But even if we adjusted them for the weekly, it still would be very sloppy. Well, actually, let's go ahead and just take a look at what that would look like for the weekly. Something like this, they're probably just looking at. Then maybe do this one. You see, on the weekly, they don't really get those clean touches, right? And this isn't very textbook. This is just like meandering. So we could see one, two, this could be like some type of ABC wave. Like, so three, and then, there might be a pump up before a drop down based upon, some type of a weekly construction. But the thing that I don't like about the weekly is that it doesn't give you that clean data for the previous cycle that we had. We do have one, two, I mean, this is weird, but three, four with a huge fake out, five. So, I mean, this works. The weekly works. But we do just have to keep paying attention to what's going on here. You can see that on the weekly, we did have this kind of plateau before we fell down. I think a lot of people remember that in 2018. So could we plateau around this level, around 20,000, and then have our drop? Yeah, perhaps. But for right now, I'm just going to pay attention to the 2 week. The 2 week gives us plenty of time to be looking at what's going on. I'm not really in a rush for these type of patterns, for these type of macro moves. You do want to be as close to confirmation as you can get. You don't have to grab the absolute Pico bottom. And so, yeah, if we get a little bit of a pump and then we dump or something like that, or if there could be some fine tuning in either of these shapes, okay, fair enough. But like we could squeeze out just a little bit more of a pump and then perhaps dump on the 2 week. And so I am glad that I took a look at the weekly, honestly. The weekly does imply a little bit more room to run up. And so we'll be looking out for that. That's really going to be only if the Federal Reserve allows it. Okay, guys? But otherwise, we are looking to see what happens with this RSI. Does it break out of its wedge to the upside and then retest bullishly, or does it break down and then breaks out and then retest bullishly, right? And so that's going to be, this is the 2 week is really going to be our playground. The weekly is going to be a little bit harder to interpret, but perhaps could give us, quicker moves. And then, of course, beyond that, like for example, if I go to the daily, it's just gibberish, guys. It's just gibberish, right? Like, so if people aren't looking at these type of like macro moves, like they just have no idea what's going on. You can see the wedges, right? It's just you can't make heads or tails of that. Go to the 5 day. The 5 day does have a lot of good information, but it's just again, it's just very complicated. Okay, so yeah, I think I'm going to stick with the 2 week for now. And the weekly, I'll just keep myself updated. I may want to try the 5 day as we approach closer to November and the next Federal Reserve meeting. Guys, that's basically Bitcoin for you. You understand what I'm telling you, right? Let's drop down to the 4 hour. We're basically just in this downward channel still. We had a nice fake out to the upside, a nice fake out to the downside. This is all very typical, quadruple witching stuff. This is all very typical, just shaking out the market before a Federal Reserve meeting stuff. And so, we're getting a nice bounce here. We're actually just cleanly moving along this channel if you don't count these fake outs. And so, what would I expect? I don't know, maybe a bit of sideways action to the top of the channel, maybe another breakdown to 18.2. It just depends on what happens. It just depends upon what happens in the stock market, I guess. Uh, Bitcoin is probably just following the S&P or the Nasdaq. We'll check on those later, but you guys understand the number to beat is basically 19,600, and you really want to get above that 19,800 zone in order to capture your daily momentum. If we can get above that 19,800 zone, then probably, right, with a couple significant candles, maybe a couple 4-hour candles, then probably we're going to work our way to the upside. And then you understand that we have kind of a hard limit here around 21,600 if we should just go vertical, which we've kind of been going vertical a lot of times, right? So if we do go vertical, then probably 21,600. If we break out of that, we're going to have broken out of our macro downtrend. So I do suggest there are probably a couple limits. Another limit to watch out for is this weekly 9 around, around 21,000 flat, right? So 21,000 to 21,500, probably the upper limit for any move before Jerome Powell gives out data. And then again, what you're looking for is 19,800 on the daily to kind of front run that type of a move. Until then, we're looking quite bearish, and sideways or down is the name of the game until we can recapture that momentum zone. Let's go over to BTC, the professional exchanges, just to see what it looks like. And guys, by the way, remember, a week or two ago, I put in this fractal, right? Just from the one of the previous drops, and I suggested this is what it could what it could look like. Man, like yeah, I'm off on the location, like we're doing it from here, but look at this, like it's just following it perfectly. And if we did get a little pump, I mean, we did get a little pump. It would be sort of like this pump right here on this fractal, and then look where it took us down to, and what the heck? Yeah, that fractal actually lines up exactly with this type of a target of 8,000. So if we do have a catastrophic fall and we are following some type of a fractal from these previous drop points, then it could look something like this. And if you do just scale back a bit on the CME chart for Bitcoin, then you do see that that would allow us to recapture our CME gap here at 11,000 and also at 9,800, and it would be right in line with the bottom of the chart, right? These 2 points right here, and then just kind of a diagonal up, and then let's see, go back to the daily. And then basically we'd be caught here. So we have a fractal, we have CME gaps, we have a diagonal, and then we have another like internal diagonal that kind of wedges us into this area. Guys, just personally, if we do get like a 100 basis points increase, a you know 125 base. I don't know. Like if the Federal Reserve goes extreme, then I'm still going to be open-minded to these areas down here. But just keep in mind that I did talk about the head and shoulders on Bitcoin, which does lead basically to 14,000, okay? And so these type of patterns haven't lied to us in the past, these type of macro patterns. And so if the market does stop around 14,000, right? 14,000 to 16,000, let's say. Let's give it a little bit of a range, a little bit of wiggle room, right? A zone. If the market does stop falling around 14,000 to 16,000, whether it's this Federal Reserve meeting or whether it's in November, then don't say that I didn't warn you about that, okay? Just because I'm personally like having my eye on that $8,000 zone, it doesn't mean that this market is going to do what I want it to do, right? It could just come down here to 14,000, 16,000, and then that just happens to be the bottom of the market, right? Let's go ahead and take our fibs here and just where would be the 886? I mean, the 886 would be 11,500. There's no guarantee that it's going all the way to the 886. Bitcoin has respected these fibs incredibly well. In fact, let me get rid of our support and resistance lines. Just take a look at these fib lines, and you can see, we were supported on the 236. We had a limitation in this area right here at the 382. We had a bottom of it at the 0.5, right? Basically, the 618 is where we got support on this little shelf right here, and then the 66 is where we had a limitation on this bounce, and we're sitting directly on the 786. And so Bitcoin has respected fibs incredibly, incredibly well. And so, when you see people targeting like 10,000 bucks, maybe that's not exactly right. Maybe it's something more like 11,300, which is the 886, right? So if Bitcoin continues to honor the fibs as strongly as it has been honoring the fibs, then that 886 would be a natural target. However, they don't always reach, right? When it's the last move, they don't always reach the last level. Okay, so you have to be open-minded to the fact that it might actually bounce. It might just bounce from in between these two levels, and that would actually be the measured move of that head and shoulders. Let's take a look at and see what happened back here when we had basically from here. Let's see. No, Bitcoin did reach the 886 almost perfectly on this move. Is this the right place to? It's just weird when you go parabolic like this. But you can see that it did hit the 886 or very close to the 886, okay? So, yeah, you can't really knock it on the previous cycle. Let's see what it did over here during COVID even. Might be a little bit more extreme. No, it bottomed out at the 886, guys, and even a little bit lower. So, guys, I mean, a lot of people are criticizing that $10,000 area, but I mean, that corresponds with the 886, right? So it would correspond with the 886 and then a little wick lower, which could then fill those CME gaps, right? That CME gap right here at 11,500 and this CME gap at 9,700. So let's just say that we do drop to basically the 886, and then we just have a little bit of a flash wick down that would fill in our CME gaps. It would take out the 886, and then maybe it's only up only from there, right? So, yeah, guys, I'm giving you multiple theories of the market here. I hope you appreciate that. I hope this helps you envision where you want to target yourself. I'm also showing you, of course, my own theories, right? Like the alpha origin channels. So, completely original to my own thinking. So if we take a look at the alpha origin channels, go on log, right? Then you can see where that 886 lines up with is actually, and also the bottom of that CME gap. I didn't really notice that before. Right at the bottom of my green line. Okay, so yeah, guys, look at this. Like it lines up right at the bottom of this green line right here. So yeah, I mean that would be touching the grass. I mean that's what I suggested these origin lines for, basically so you can understand that this is an overheated zone. This is still too hot. Yellow line, things like capitulation can start. White line, probably capitulation is going into its final stages. Blood line, it suddenly is a good value to start to buy. Right, that's where we are right now. And then in this green zone, you're basically like touching the grass. And I would feel pretty safe to DCA anywhere in this green zone. Right now, if we do just kind of zoom in, you can see that we are back into that green zone. And so if anyone wants to be DCAing in at these levels, again, I'm not a financial advisor. I'm not giving anyone financial advice. This is just a channel for my own personal growth and also the growth of my actually in real life friends and also just my trading friends that we talk to each other in groups. And so, during this bear market, it's for, growing purposes. But in a casual sense, I just couldn't be against anyone DCAing in this green zone. And while there could be a chance that we flash wick even lower, right, get to some crazy low numbers, or even crypto maybe could go to zero, quote unquote, go to zero. As long as we're underneath my bloodline, I really do trust that we're in a good spot. That later on we're going to come back Let me turn off the alpha origin channels. That later on we're going to come back and fill in these CME gaps up here, these purple lines that we have up here at a minimum. Okay, so usually we don't just keep CME gaps open, we fill them later on. And so if we drop down and fill these CME gaps, that's honestly going to be a great sign to me that over time we're going to work our way back up and fill in these upper CME gaps. So if you're buying anywhere between these top CME gaps and these bottom CME gaps, it's probably a good buy. Are you guys following my logic? Okay, the market likes to fill in CME gaps. So as long as we're underneath these higher CME gaps, right, then we're at a relatively good value because most likely price action is going to come up someday to fill in those CME gaps. And, even though it may seem terrifying, if we do fill in these CME gaps down here, that's actually the best sign that you could possibly have in the market because it would suggest that the market wants to move away from this area. Like you don't fill in CME gaps unless you think that, that you're not going to come back to this area ever again. Like that's why you would have to push the market to fill in those gaps. That's why market makers, exchanges, people, these institutions that thrive on data, they really push the market down to fill in CME gaps using their own capital in order to get that data. And so the only reason they would do that is if they think that, first of all, we're close enough to it, and that most likely that we would move away from it too far for them to be able to push it back down to get that data again later. And so that would suggest that we're going to take off and perhaps fill in the upper gaps later on. So guys, this is kind of exciting, right? Like we're getting close to this stuff. And, if you're buying around the halfway point between these CME gaps, just that's my theory of the market. Do you understand? That's why I don't mind putting a green box right here, right, on this measured move of this head and shoulders. Let me get out of log scale, right? Because, if we do collapse down the full length of this head and shoulders, that's a great spot to buy. Right, 14,000 to 16,000 is a great spot to buy because its risk to reward is very good between this CME gap and this top CME gap. Okay, so it's this is basically like 4 to 1 over here, right? So that's a really good gamble if you're just going by a CME gap theory of the market, using like that kind of a professional exchange kind of concept. And over time it should pay off. Even if it's just a even if we just get a relief rally to fill in those gaps and then Bitcoin eventually goes to zero, let's just pretend, okay? Like crypto becomes illegal or something, okay? Like later on. Like, and so we get this bounce and then we fall down here, lots of regulation, crypto goes to zero. Well, you still made your money off of that bounce, okay? Like within the meantime. And so that's a good risk to reward ratio if you're just playing like some type of a CME gap theory. Going back over to that CME chart, okay, the one that actually has the actual holes in the chart, which are the gaps that we're talking about, right? You see this gap right here, this gap right here, right? See this gap in the chart down here, and then there's a little tiny one above it right here. It's pretty much filled in, but it does exist, okay? And so I don't really count that as a strong one. But just if you wanted to get my opinion on an extreme drop in these charts, this would be a logical point to consider as we have the fractal, we have the CME gaps, we have the trend line, right? And then, of course, if everyone's targeting 10,000, well, some people saying, well, it's not going to get there. It's going to do only, 17,000, something like that. Like people targeting 10,000 are going to be totally wrecked. Well, that's not necessarily true because yeah, it could be a front run, but it could also be just completely torn through, right? And so people targeting 10,000 might get wrecked because the market actually goes down to like 7,000 or something, right? Like it's not just one direction that you have to be thinking about. And so these guys who are like mocking people for targeting $10,000, saying, "Oh, everyone's targeting $10,000, so it's not going to go to $10,000. That's why I think we should buy at 17,000." Well, guys, like it doesn't have to be higher than 10,000. It could be lower than 10,000, right? That could be how the guys at 10,000 get wrecked. That could be how the majority of the market gets wrecked because it pushes totally through their positions, liquidates them, by going down further than what they expected dramatically, and then also scares them out of the market, and then all these institutions and whoever wants Bitcoin like swoops up and buys the carnage at the absolute bottom. And so, guys, like you just can't have like one idea, like, oh, I don't think it's going to go to 10,000 because everyone's targeting 10,000. I'm going to buy at 17,000. That's a safe move for a DCA, right? Just like 16,000, 14,000, 12,000, right? 10,000. All of these numbers are safe kind of DCA points if you have a big theory of the market that these CME gaps are at the minimum going to be filled, even if we don't ever get back to all-time highs. Let's just say this asset class is dead, okay? Just pretend this asset class is dead. Well, if you still have a theory of the market that the market wants to at least check back to the CME gaps, then you can feel pretty safe starting to DCA in on really good projects, assuming that you're willing to hold for as long as a recession could take, which could take all of 2023. It could take into 2024. And so, guys, like the reason why I trade instead of DCA is that I don't personally want to be holding for up to 2 to 3 years. Anyone who is DCAing in, you're ostensibly like making yourself an investor, and an investor should be willing to hold for at least 2 to 3 years in order to get the returns that they want, right? And so you do have to be thinking in terms of your risk, not just in terms of dollars, where we're at good dollar levels, all right? We're entering good dollar levels, but also your risk in terms of time, and can you afford to have your capital, um, basically locked up into an asset for as long as it takes to be profitable, and you're not just going to suddenly sell just because everything has been weak for half a year, right? And so I'm just trying to talk to you about the big picture stuff. Let's jump over to Ethereum because, well, first of all, let's take a look at the momentum zones on the CME chart. So very similar here, guys. Let me jump down to the 4 hour. Very similar. Uh, Basically, we have this 19,500 area for the MACD to have continuation to the upside on the daily, and then 21,000 looks like a pretty hard limit there for the daily Stokes. It looks like we might not be able to get the daily to turn up. The CME also has its own downtrend, slightly different than the 24/7 exchange, but you can see that we would bump our head into that downtrend, and also that we have the daily Stokes. We would be very bullish if we did break 21,000 on the CME. How did that compare to a Bitcoin 24/7 exchanges? Uh, let's see. Oh, that was also no, that was the 9 EMA. Oh, that's interesting. This the daily Stokes on the 24/7 exchanges is way different than the CME chart, but the weekly 9 is up there, and so yeah, I mean, there may be just a tough, there may be a little bit of a battle to push through 21,000 if we do pump up there. That's still suggesting that could be 21,000 to 21,500 could be a resistance zone that we face depending how we pop up if we do pop up. And then on the 24/7 exchange, we have to get above 19,700, but on the CME, we have to get above 19,500. So basically the same range. Okay, guys, basically the same range. But those are the momentum zones that we have to capture if you want to be bullish. First boss and second boss, okay? And then we can talk about if we break out of the downtrend, we can talk about that later on. Popping over to ETH now. Just really quickly, we did reach my target of that CME gap, which we did fill. So let me go ahead and color that in gray. We actually did create a new CME gap. And so I did suggest that we were likely to fill that in. We'll take a look at the CME chart, the professional exchange for Ethereum a little bit later, but let's just take a look at the 24/7 exchange right now. For the 24/7 exchange, we failed to capture our daily Stoke value, which we needed to be bullish on the daily here, and so we did get a pretty hard rejection there. However, we are making a little bit of a higher low, assuming this candle closes the day like this. We can take a look at the daily But the MACD, look at this. MACD for continuation to the upside is all the way up at 1860. That is a tall order for Ethereum to fill. So there is a very unlikely chance that Ethereum is just going to skyrocket to 1860. Okay, like it's a huge gap to fill, man. That's a 40%. And so yeah, that's interesting. I mean, that could be updated later. We do have these kind of weekly zones. I mean, the weekly 9 is at 1520. So let me just double check this actually. Let's look at the daily because that number doesn't seem right to me. Yeah, this doesn't seem right. Yeah, this should be 1460. 1860 would be for the MACD to cross the you see why it's important to have kind of like some common sense? You can't just go by the indicators. You do have to be able to have some intuitive sense because you might mark out a pattern wrong. You might have some information wrong, right? And as long as you're, on top of it, as long as you understand the tools that you use, you can say like, "Hey, that looks wrong to me," right? And then you can make a correction. Like nobody can be 100% right. And so now we can see that the actual MACD continuation zone is 1460. The 1860 number is actually if the MACD crosses over its midline, and that would suggest like hyper bullishness. Okay, so that 1860 is still a valid zone to be considering, or wherever it was previously. Yeah, something like this, 1860. If you take out that 1860, like we're gonna go to the moon, guys. Okay, but for now, we're just looking for these dailies to break basically 1380, and then perhaps we could have some continuation to the upside. And then if we break that to 1460, that's going to be a good look for Ethereum in terms of having a chance to starting to squeeze on the weekly. Okay, so if Ethereum wants to recover itself, really it needs to get above that 1460. But even if it pops up above, basically 1400, let's just say flat, then it'll still be looking pretty strong. At least it'll have another day to fight, right? Let's see here. Let's jump over to a ETH CME chart. We did open up another gap as we fell down. And what I suggested to you guys is, first of all, like we nailed this one, right? Boom, right? Like we nailed that call. The markets have been led by Ethereum. And so it does suggest that on the way down, it would also be led by Ethereum because a lot of the coins, a lot of the market that had been tied to Ethereum in terms of its just massive run up, right? As Ethereum broke down, the rest of the market would be breaking down with it, and so you had to target those key points on the Ethereum chart. And jumping to the 4 hour, you can see that Ethereum, of course, would want to fill in that CME gap. That was the theory of the market that I had for Ethereum. And boom, guys, boom, like we nailed that. And if you had just plotted this, bottom action, this CME gap against all the other coins, like it doesn't matter which coin you were in, you could basically have, basically captured this move, okay, this entire move down because that was the target, and that's what we set here at Alpha Commission. We set that as a target, and it was just lovely, and we successfully gathered that. Now, I do like to make a little bit of a deal when we do get just a great like a macro trade, right? Or at least higher time frame trade, because guys, like. Trading isn't easy, right? Like, you're not going to win every trade. Yesterday, I thought that we were going to pump up and fill this gap, right? And now a lot of people on their channels, like, they're not going to tell you, like, when they make a failure or something. And while technically this wasn't, an extreme failure, you can see that 1/4 of this CME gap has been left open, right? This one that got opened as we fell down to fill this previous CME gap. And so while I did have a theory that we would pump up and fill this gap completely, I was making that call around here, and so I was wrong, right? I was wrong. I made a mistake in this trade. I thought that we could reach 1400. In fact, the chart only reached 1392. Now you may say, well, that's only an $8 difference, but it could be a critical difference for some traders, right? And it's impossible to be 100% correct. Look at this. I was at least 25% wrong, okay, on filling this thing. Yes, we did capture the move to attempt to fill this gap, and yes, that was a significant bounce of 8%, and yes, it was only 1% basically that we were mistaken over here. But you know, again, like you're not going to get every trade, and sometimes you're going to get front run, right? Like the market basically front run the filling of this gap, and then made another reach for it, but failed again, showing just how weak this asset is right now. People are just selling it off, right? And it needed to retest the lows to try to figure out, what type of strength it actually had. So it just wasn't able to fill in that CME gap. And so the reason why I like to make a big deal about the wins that we get is because, guys, if you're doing just 50-50 in the market, you're doing way better than the market, okay? Like 90% of market participants in terms of trading, like they're just failures. They just have no clue how to trade whatsoever. They don't try to better themselves. They are literally just gamblers putting their money into the casino and then pulling the switch and hoping that it lands on their color, okay? Like or whatever I'm pretty sure I just mixed up a bunch of different casino games. But basically, you're just gambling, okay? Like most people are just gambling. So if your win rate isn't like at least 60%, right? At least 60%, don't be trading with more than like $100 at a time. Just most people can afford $100 and to take some loss off of $100, but don't be trading with like $5,000 if your trading history isn't better than 60% win rate. Okay, like and then once you get better than 60% consistently, then maybe talk about using like thousands of dollars or like $500 or whatever you think is reasonable when you have a consistent win. But I like to point out our wins just because for most people, that might be the only time that they've won in a long time, right? So most people are hurting in this market right now. And I'm not trying to be arrogant or anything. And I also want to point out like where we were wrong, right? We also make mistakes. It's just because I have a better than 60% win ratio these days, I don't feel the need to like emphasize that stuff because we still got this move, right? We still got this move, right? So it was an 8% move. And yes, we didn't get to my target and we didn't exceed it. And also on Bitcoin, right? If we take a look at Bitcoin, I was suggesting I had talked about the bullish case and I said I wanted to see us above this. So we didn't meet my conditions. We didn't get above my white line. And so, but I had the idea, I had the expectation that based upon this bullish divergence and some other divergence that I had seen in the charts, that perhaps we could take out this zone and maybe even go up to this white dashed line. I didn't even talk about this downside, right? I didn't mention that we could come down to the bottom of the channel. I mean, yes, the channel was drawn there, and it's kind of obvious that if we did drop, that we could come to the bottom here. But I should have also warned that, if we failed to meet my conditions for bullishness, that the likelihood was that we would come back and retest either the lows or at least the bottom of this trend. And that's something that I could have said, which I didn't say. And so this was also kind of a loss, right? Because we could have had a trade either way, and I didn't mention this one. And so that's also technically an opportunity cost, right? It's a loss that you didn't really lose anything, but there was an opportunity loss because we didn't take a short there, right? When we could have taken a short. And so guys, like you can consider this to also be a loss. And again, like most traders, they're never going to show you where they had a weakness of thinking, right? Where they weren't perfect, that sort of thing. And I don't want to be that type of guy, right? But at the same time, I don't need to dwell on those type of moves that you miss. You don't have to take every single trade. And pardon me, let's jump over to the Ethereum. There we go. Ethereum's chart. And, if you're off by just a little bit, I mean, you can still count that as a win in many cases, where you called to fill in the CME gap and it mostly filled. And then you could take your profit as you see yourself breaking down, or you might just come back to wherever you pumped from, right? And maybe it's a net zero. Anyway, guys, you get my point. I'm going to celebrate our wins, but please don't think that I'm just somebody who's just trying to brag or something like that, or that I'm trying to be fake. There are many calls that I failed to call. For example, I could have called that we could have gotten rejected off of this. I often talk about how CME gaps are used as support, but I didn't mention that the CME gap could be used as resistance as well, right? And so we did use it as resistance in this case. And in fact, we used it as resistance twice. And so that also could have been a shorting opportunity. But, and you can see how we're using it as support, right? So like there are many calls that you can make. You just can't be perfect. You can't be 100%. No one is 100%. If you're better than 60%, you're actually a good trader. And, most people are just losing like 90% of the time, guys. And they're not bettering themselves. At least here at Alpha Commission, we're trying to better ourselves. Sorry if this was all long-winded. Just trying to give a little pep talk there because a lot of people, and everyone starts out with those like 90% losses. 10% is probably just luck, right? The gambling luck, especially in a bull market because the market tends to go up. So 10% of the, whoever entered in a bull market, like for 10% of the time, they tend to win. It's just that they're losing like 90% of the time. And then you have to make the decision to become a better trader. You have to make the decision to learn these things and to also limit the amount of risk that you have until you're consistently winning over 60% of the time, and no one's going to be 100%, guys. Let's go ahead and look at stocks again. Just on Ethereum, CME, you do see our momentum zone is up here at 1580. Let's see on the daily. Let's go ahead and just double check this stuff. It's actually dropped a bit to 1512. And that's because the day closed, guys. We just had a daily closure. So we're starting a new daily candle. Okay, so these lines will be slightly different, but you can see that we didn't capture those lines on Bitcoin and we didn't capture them on Ethereum. So yeah, we did put in a bearish candle, bearish closing for the day. So yeah, too bad about that. But let's see here for Bitcoin. Yeah, for Bitcoin, this momentum zone stays the same. And for ETH, yeah, that's pretty much the same. Okay, yeah, and so for ETH, yeah, these momentum zones are the same also. So yes, the momentum zones that I'm showing you are valid for the next 24 hours, guys. So coming into the Jerome Powell meeting, this is going to work for you. Basically around 1380 on Ethereum, and then 1460 is the number that you really want to be above, like just to give yourself the best chance. We're underneath those things right now. Not great. And same thing with Bitcoin. Let's see, above that 19,700, above that 19,750 is where you want to be. We're way below that. So not great coming into the next 24 hours. If we do get ahead of those numbers, that will be an interesting sign of perhaps bullishness. On stocks, we are we did grab this move. Let me just double check here, guys. Look, so look at what I was projecting out, and look what we did, guys. Like we actually tagged the zone. Just like ETH on the CME chart, we didn't hit precisely. Like the market was just showing too much weakness. But boom, guys, boom, right? Like we grabbed this. This was our target, this red line, and boom! I told you guys like follow the S&P 500. Like Bitcoin and Ethereum just are not bullish enough assets at this time to like really be playing. Unless you know, I mean, to really show what the market's doing. But if you follow the S&P right now, you can see like where the market is trying to move to. And yeah, I thought this was going to be a little bit of a broader down move. We are getting quite a dramatic down move, but we basically hit our this target down here. We hit the target of 3,900, did a little check back, and then hit this red line up here. Boom! No, we didn't get that top line, but that was kind of a stretch goal anyway. The market is just too weak. And then, guys, but that was a nice play. And then the fall down, right? Boom, like we're falling, right? So this was a great call over here by Alpha Commission. And I love winning. So, of course, I'm going to celebrate that, guys. Not trying to be arrogant. Again, we didn't hit my top one. I was wrong about that one, right? This fell quite faster than I expected. So I was wrong about how fast it could fall. But still, boom, 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 guys, like we did it, okay? Like we did it. And also the pullback, boom, right? Now, guys, just keep in mind that 3,800 is the line in the sand for me on the S&P 500. We don't want to break 3,800. We break 3,800, and I just project like we're gonna just fall to hell, okay? So the S&P 500 mini futures, guys, mini futures. That's ES1 exclamation point. That's the symbol. Like, just watch out for 3,800. And Otherwise, we could just be going sideways. I did update the momentum zones on this one, so we really want to see, we would want to see stocks basically pumping up into this area above 3,900, basically 39.35 and 39.70. If we can get into here, like we're going to be able to capture our momentum to the upside. But as long as we're below this, just like Bitcoin and ETH, we're in a very precarious position, right? Going into the Federal Reserve. So let's just pay attention to this space. Let's just watch this space. I can't really tell you if we're going to go up or down. I can just give you conditions that we have to meet, which is 75 basis points, could be some sideways action, could be up or down, right? I don't know. Um, the market may not like it, or they may be okay with it. 80% thinks it's going to be 75, so like it'll just be normal price action is basically what's going to happen if we get 75 basis points. Although something weird could be like funny business during the meetings, right? During the meeting week. Um, but if we get 50 basis points, probably we're going to just pump, right? 75 basis points, we may pump a little bit. And then 100 basis points, I think we're going to be retesting our June lows, to be honest, and probably challenging this 3,800. Guys, looking at the NASDAQ, it's basically the exact same thing. We are breaking down significantly on the NASDAQ, so it's very sloppy and ugly. Don't need to really go over that too much. We covered it with the S&P 500. They're basically the same chart at this point. Let's go ahead and go over some risk factors. The dollar just pumping super bullishly. Throw on your EMAs and look at that on the daily. Boom, just extremely bullish, just holding on to this yellow zone that I did suggest that we were likely to hold and would be the worst case situation. Coming up on that target of 111, 114. Don't know if it's going to be able to continue to go. We'll find out with the Fed, but this is not how you want to be positioned going into a Fed meeting. This looks incredibly bullish. Flip onto the weekly. It's above the 4 weekly. It's incredibly bullish, guys. Okay, go back to the daily. VIX, same thing. Above the daily 4. Flip to the weekly. Above the weekly 4. We even checked back to it, and now we've pumped back up. Okay, so that's incredibly bullish, guys, which is bad for markets. Okay, that volatility is bad for markets. We are entering that not good for trading zone very closely. We're pretty far away from the pretty good for trading zone, right? And so we are just in the middle, and the Fed is going to choose the direction. USDT, I mean, this is bullish AF. We do have a bit of a trend line here. We've pushed through it before, but you can see that we are getting a little bit of rejection off of it. So that's pretty cool to see, guys. Like, smack down, smack down, smack down, smack down, right? Touch, 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 right? And so basically, this thing could continue to go, but it would take a little bit more energy to get to break through that. But above the 4 weekly, above the daily 4, and so guys, this thing's just super bullish, which is bad for crypto. Okay, like all of these things are just super bullish, all of these risk factors, and it's just bad for crypto. ZIL, all of these momentum zones are updated. Okay, guys. So as I just go through these coins really quickly, ZIL under its momentum zone needs to recapture 33.5 cents. ADA underneath its momentum zone needs to recapture 47 cents. Kadena under its momentum zone, challenging its support here, needs to recapture basically $1.54. CRV under its momentum zone, trying to hang on, but under its momentum zone, needs to recapture $1.03. Flux under its momentum zone, way under it, losing everything. Flux just completely having lost its bullishness under its daily 200. So, guys, what did I say? Take your profit on Flux up here. I said this was your last chance to take your profit on Flux. You guys gotta believe me when I say like take your profit, guys. Like, I know it's gonna be hard to swallow, but you're 40% down if you didn't take your profit. So take your profit, guys. Always be selling. Always take your profit. Put food on the table. These coins aren't going to be loyal to you, so don't be loyal to these coins, right? Just take your profit, guys. All right, that's your alpha for the day. Stay safe, especially coming into the Jerome Powell meeting. There might be rumors, there might be leaks tonight, tomorrow morning, and then I think 2 o'clock in the afternoon, 2:30 in the afternoon Eastern Standard Time, Jerome Powell should be speaking. So just watch out and pay attention to the market at that time because it might be how you want to position yourself. I think I prepared you for it. Really good luck, guys. Okay, and that was your alpha for the day. Stay safe and happy trading.